Good morning. This is Fari Hemzi, and today is December 9th, 2021. It's about 8:34 a.m. Eastern. Today is the rollover day, which is as defined by CME. As you know, they changed the hours for the RTH. The settlement now is at 4 p.m., same time as cash. There was a comment earlier today, or yesterday actually. Oh, I think they've changed the rollover date. You need to, because of our system, you need to have the, out of the, don't use the at sign, which is, here's very briefly, if you put at in front of these, not here, hold on. Yeah, if you put at sign here, if you put at sign, they become continuous contract. That's good for back testing. The problem is it gets a little bit into trouble near rollover. And also, I don't like to trade on continuous contract. I'm going to trade on real values, so that if you do a back test and you present your results, somebody can find that price, the time and date. You can see the price trading there, because there's about 6 to 7 handles off the carrying cost, as we can see here. For example, look at ESHN21. There we go. There's your 7 handle on the ES. On the NQ, it's about 3 right now, right? It's about 3. These starts adding up if you go back 4 or 5 contracts, or let's say a full year before contracts. They add up. Numbers that don't exist. The ratios are the same. If you're doing neural network, if you're doing artificial intelligence, it works, but not for reporting. So we went back to look at again the volume. Volume says no, they haven't changed it. Look at the volume here. We haven't crossed. This is 6 to 1 right now in NQ. Advantage to December, and about 3 to 1 on ES. Now this will reduce throughout the day, but it will not cross over. That means the H22 would not be lead until tomorrow morning. So late tomorrow, well, tonight we recommend not to trade overnight. You don't want to be caught on the wrong side, because it could really start shrinking. But we'll put you on we'll put our symbols. We change our symbols on our broadcast videos. That's live late tonight. Okay, like I don't know, 6, 7 o'clock after the Globex reopens, we put it there. Okay, that's that. That's one. 2. Again, we moved the webinar from every Wednesday to every Thursday for a number of reasons. We put every other Tuesday as a test drive, as we're building our case for improvements in both ORB, which we think is minimal, but the second part of the puzzle, which is post IB, things happening after 10:30, and we're actually coming up to results that says preliminary results right now that hold on, that we need to see where this dot stops. That's 12:15. That's a lot. The trade will. No, it's not engaged here. I understand that. This is an H22. Okay. But it says that we if it was engaged, then you let's see if this was NQZ21.D. Good. Huh? Z. Hold on. NQZ21.D. What are you talking about, Jack? There we go. Okay, there we go. Here comes the data. Okay, now we got to engage it. This is a precaution, so it doesn't automatically go and trade when you don't want it. You go there and you engage, automate. This is the same account I'm showing you. I cannot show live accounts anyway. They're happening on a different machine, plus privacy reasons. Okay, now it's going to engage. And, why I'm not, what's going on here? 15, today's the 9th. There we go. Engaged here. Oh, I'm sorry. It doesn't trade on Wednesdays. That's right. It doesn't trade on Wednesdays by design. Returns are very lousy. Look at it. Look at it. Yeah. Somehow, because the ORB, opening range breakout, we have a lot of that historically. This is empirical observation on Mondays and Fridays. Okay. So Wednesday is going to be a middle of the week. It's too tired. It's trying to catch up for the, let's say mega Monday mergers or non-farm and option expiration. The only time Wednesday matters is Wednesday afternoon when we have FOMC. But then this machine, this system doesn't trade that late in the day. So But you can see what it did here. This was 27% return in 2.5 hours. Okay. So we're getting to that point where the other part is getting ready. I'm thinking probably a couple more weeks for presentation to you guys, but it's just beginning to get into a very, very early alpha test. But we're taking a couple of days off by design, and just both me and the program were burned out. And we're working on this bot that's been amazing for yield enhancement throughout the day. So, having said that, we moved this one to Thursday. Good thing about it now, that's a good part. We'll have the day before non-farm, the day before option expiration, because it's every Thursday. It's not every other Tuesday. It's every Thursday. So it separates the two. I work late sometimes, but I can think clearly. Tico goes to bed, and I'm just have time to myself to think. And sometimes just want to sleep in a little bit in the mornings if I can. 2 days back to back is too much. Anyhow, having said that, the downside was go to meeting. They told me, oh, no, you can't. What was it? We could not change the date properly because it was multi events. Because it's every week. It repeats itself. You only need to join once. Well, I said, don't worry about it. Create a new one. Delete this. We'll move it in the background. They didn't. They messed up. And I wasted a lot of time with them. Very disappointed. And so when I sent a new one out, you guys have joined. You just join once. It repeats and it reminds you. 2 days ago, 1 day to go, and I think 1 hour to go. We didn't say 4 hours because it's in the morning, so you got to be asleep anyway. Okay. So I'm glad that you guys on this side just keep adding. We'll keep sending you notices out. If you already joined, don't join. It's automatically you're in there. All right. And then we'll smooth up. We've got about 60% of the people back already. We did have lists. That's what we use. We download. We had lists, but some people it was too short. They'll get to. I'll remind them again. They get on board. All right. Having said that, this is housekeeping stuff. Okay. And one more thing. Incredible event has happened. Number of people have upgraded from being in the chat room to have their own system and the chat room, having the trading system on their trade station. Number of people have switched out of TD. One of the guys at trade station said that, is like, we usually lose people to TD. What are you doing that are coming back to us, or well, not coming back to us? They will never run trade station, but they're not signing up. And I said, how do you know? She said, well, the wire transfer. It's coming out of TD. I said, what are you doing? I said, nothing. I'm just a poor dumb immigrant. I'm not doing anything. Welcome to my America. Yeah, exactly. So, come on. Wow, that's a long time no see. Hey, Kevin, let me put you on the other side. You are an organizer, young man. Okay. The enforcer. Yes. Hi, Tom. Oh, Tom. I haven't heard from you in months. Okay, good. Okay, let's get this show on the road. So I've said that this is being recorded. If you missed the early part, you can play the early part later. Okay, it will go up in our videos shortly. Okay. Another thing you could do is subscribe here. If you subscribe here, you can get to us real quickly. Every update we do, you get. We have about 1,250 people there. Okay. Right. Okay. What do we do first? Oh, we do Econ Calendar, which Ricky, our dear friend, chain smoking fellow, another Italiano, at the Merck, was talking about jobless claims. Let's see what we got. I'm going to remind you something. The economy is very strong in terms of the speed. Okay, the speed it's in. It's not where it's supposed to be. In my opinion, it should be higher, but we got to get the vaccinations done. People back to work. And if I was in charge, and thank God I'm not. You take that to heart that I'm not, because I'm very autocratic, yet democratic. Not a Dem. I'm a Republican, but I am somewhat autocratic and say I would have put, and the airlines will hate me. I would put vaccination requirement on airlines. Yeah, and any travel, we have to. This is not a joke. I said that about Delta, but if you look at the data, I have a lot of biotech fund managers as friends, and one of them as family. I talk to these people. They're telling me, he says, if we told you before that Delta is a real thing, forget Delta. This is worse. Now, the side effect of the Omicron is that it's a little bit, the damage is less, hopefully, or you feel that way, or at least your time in the hospital is less, but but it is a serious infector. The spreading is huge. So if you're not in Florida, stay out. Don't come in here right now. It's not good for you. I think Florida probably going to get hit the worst. You'll see. Just like my other predictions have came true. Watch this one too. Okay, today jobless claims. And again, goes back to jobs. Because why? Jobs buys property, pays mortgage, buys cars, and all that. By the way, the used car situation is incredibly crazy now down here. Actually, I ended up taking over my lease. I was going to get a new one. There's no cars, no chips, and you go to buy. They're trying to sell you a pre-owned. Well, if you have a lease yourself and you got it fresh, brand new, might as well keep that the best pre-owned because you know how you treat it. And I have 500. I have about 400 miles a month on this car. It's nothing. It's in the garage, and I'm not upgrading. The dealer wanted me to upgrade to a very very fancy European British sedan. I said no. I'm good. I'm good. For what? To sit in the garage? I don't go anywhere. Too scary to go anyway. Okay, so we got revised up on the jobless claims a tad. Last week seems to be the low. Consensus was 2 of the last one. 2 to 3 was consensus now for this week, and we got 184. Okay, but I believe last week was the low, if I'm right. Or no, that's not the low. Is this the low? Well, maybe a week before that. I don't know. Maybe there should be some adjusted. There's one of these months that was a low, just tremendous low. And the other thing you need to look at, if you go back to the non-farm payroll data last week, look at the revisions and look at by industry, the construction, by manufacturing, by hospitality. These were huge numbers. Now, there were some layoffs in other areas. Okay, I understand that. That's why the net was low. So you can look at the headline number, or you could be a statistician and say, I'm going to go to BLS, Bureau of Labor Statistics. Look at the government data. Look what these time series look like. And you got. I actually have a friend who has building a website based on sweeping data from different sites, building into time series automatically. Very clever guy. Used to work for a Richmond Fed. And so you got to really look at details and nuts and bolts. Headline numbers and TVs and political talk and all that is all BS. Numbers don't lie. Politicians do. Look at the numbers yourself. Okay. Consensus. I'm sorry. Inventory today. Yeah, it's a black report. I don't care about it. I sometimes look at greens. Always look at red. Okay. Fed balance is this afternoon. Tomorrow we have CPI. This is going to be a big one. Now, consumer sentiment has been kind of a little bit too uppy. We'll get to CPI in a second, but let's see what the consumer sentiment is. What time is it? 8:47. Okay. All right. Prior was 67. 4. Consensus is the same. Look at the range, kind of middle of the road. So nobody's expecting anything on the consumer sentiment to surprise us. We shall see. Yeah, just when you thought it was over, right? Hold on one sec. Hey, folks, if you guys are seeing the other rooms, remember we're running the go to webinar here. Okay, thanks. All right. Here's your CPI. Month to month and year to year. Jesus, this is a killer. This is a killer, especially for people who are on fixed income. I feel bad. You see a lot of them down here too. But they got to go to the 4 o'clock early bird and watch the. Did they remember Seinfeld? Did you have the Diet Coke? No, I had the Diet Coke. I mean, that's sad. That's sad. You and I are out of that area. Hopefully, thank you. Bless you. But you got we got to realize that's a tough. The majority, the center of that bell curve is that they're up to. There's a fixed income down here, and these things are killing them. 0.9, 0.7 lower, 0.5 is still pretty wide. This is a 10% range. 0.9 a month to month. That's a times 12. That's a run rate of 10%. We've never had inflation like this. So they will fix it. They have to. Otherwise, it says the government has failed. Well, we know we're in a failed state. Look at the debt. Look at the craziness with the elections and all that. I mean, look at the knowledge base. 1 out of 4 American-born citizen cannot pass the citizenship test. That tells you something, right? So we are a failed state in some ways. What's keeping us running is our military. It's not our, and the fact that we can print money, nobody's questioning it. At some point, that's going to stop. But at least the military and the two oceans, we keep it safe, okay? And for that, we thank you, Northrop Aircraft. Both the F-18s and B-2 are babies of F-18. And I'm proud of that. X energy and food, 0.6, 0.5. Even that is too high. 0.7, Jesus. Look at it's a run rate of right now they're expecting 5.1 for the trailing 12 months. But I think there's more ahead on the upside. I don't think we're going to get this lower. So set your expectation that way. Now, if we do the deflationary mode, everything, all assets will come down. Okay, including stocks. Don't forget that stocks will do that too. So that's what's in the works. Okay, Peter, let me get you on the other side. Okay, you are on the side, but let me do it. Okay. So those are things in the back of my mind thinking. Unfortunately, this son of a gun, Econ Calendar doesn't give us next week. But this is the third week. Next week actually is going to be light except expiration. So, but we'll have a meeting next Thursday. Okay, all right, done. What else? Okay, let me start the charts. We're gonna go through those. It's 8:50 right now. Okay, timer charts. Whoa, what the heck was that? That was what a gap up. Absolutely incredible. And look where we are in so many days. By the way, that's the implication on our option side. We're losing some time decay, but there's nothing like X minus X coming in. X minus S. I'm sorry, X minus S coming in a Black-Scholes model. This is gutted upside. So now we were in the, remember in 2 or 3 days we had massive downdrafts and a couple of resistance points. Okay, but still the downside won. Okay, and we got to some stabilization, sigma levels, 50 bar, couple of outside bars. Okay, and in between we had a couple of days. So trading down here was not easy, and the walls went crazy high. Now the question was, why can't we get a what do you call it, trade? It's not easy. The walls go so high, you're going to lose on the option side. Okay, we need a kind of a directional, somewhat steady. So I did change my bias to long, but I didn't put a trade on yet. But I will. I plan to put one today. Tomorrow is CPI. Yeah, it's nothing big. It's not. It's not a. I wouldn't do it next week. Well, I wouldn't do it last week. I wouldn't do it last week. Day before non-farm. I wouldn't do it last week. But here we are. Okay. Now, why did if the data was good? Let me answer that question. It's going to come up. Why did the market sold off? It was Omicron, and the comments by reversal by the fellow who runs Moderna. That really torpedoed everything. You know, that's what the fear was. I think data will come in slowly at the margin. That we better be as Bill Gates said in his second book. You better be what do you call it? Warned. You better be paranoia. Yeah, you better be have some paranoia in business. Otherwise, everybody will catch up. Especially if you lead. If you lead, that's how I work at AMZLX. I'm assuming there are people who are going to be on my tail. They're coming after me because of what we've accomplished in such a short period of time. And I understand that. That means it actually gives me the energy to move forward, push forward harder. Why? Because that's my challenge. Otherwise, this is a rat race. This is hey Randy, how are you? This is the largest economy, massive amount of technology, a lot of opportunities. Because of that, it'll draw the best and the brightest. And if you're up against best and brightest, you can't sit on your laurels. I'm glad I don't have a kid. I'm sorry, because I couldn't be paying attention to them. Even this little one, this 9 pound. Well, he's like little my son, but he never listens anyway. He's a blonde. Forget that. Okay. So pushed up. We were down here. Look at the low this was. We had a negative 300. See that down there? As you know, I was a student of Sharon McLennan and Mariam McLennan, his wife, who actually she wrote the code. She's passed away. I don't know if he is or not, but I do follow Tom every once in a while. Tom record's not too good, but something happens in what do you call it? You build a company, you pass it on to your son. He doesn't do as good as you do. So be prepared of that. Yeah. Something happening there, but that's okay. We're up 54 now. Good bounce from 300. One of the things we had not seen before was breadth thrust. I posted these charts a couple of times as a PSA to share, to give back. Remember, mommy said you can't take your brain with you either. So I do that on Twitter, at Hamzy Analytics on Twitter. It's open feed. This we had not seen. Okay, we've seen all of these things go negative, but we have not seen breadth thrust to go this. Maybe it's touched it. It's gone down a little bit, but nothing like this. This was huge. And as Peter Cook, our highly respected and a learned colleague in our chat room, and he runs our chat room, is a chat moderator for the NQ. He says, this looks to me accumulation. That's absolutely right. This is what they did. Now we know. Now we know it was accumulation. They just shook the trees. They shook the trees any way they could. People who were slightly short, they want to ease off, they want to get out and buy a lot cheaper. Mission accomplished. Okay. And a bunch of people fell for it, but that's okay. This happens. You could see also the volume data, volume ratios were not confirming these big drops. Look at that. Look at volume. We had actually a little bit of up volume that day when we were down this low. Okay. Now, one could say that was a reversal partially. That's not, look at the bar. That's not a full reversal. Okay. But that's, we had a partial, but we had a somewhat of positive volume ratio. I'll get into that too. And you see now we have a cross here. So my target now is 5,000 SMPs. Canaries. All right. Again, you see a cross coming up on Russell. This is crucial. Russell, and Russell, right? Favorite words of Peter Cook over in the chat. This is very unusual. This is all-time high. We have never gone from here to there in one day. Okay, we have not been touched. This was really crazy. I don't know. One of the components must have gone wrong. I don't know. Again, we probably have to ask Peter. He analyzes this stuff as a process control engineer. Analyze this stuff amazingly. But one or two of the components of the Dow Jones Transportation went nuts that day, thus giving us an intraday reading this high. Even if you look at the closing basis, it just was incredible. Touched it a few times, never got passed through. Down now. Cross is coming. These two CIs are based on the subgraphs, not the main one. Okay, I'm not interested in what DGIA does or utilities. It's good to look at. I like to look at the sigma level, feel the vibration. But what's important to me is what's going on with the culprits, the ones that move this, the Russell and Trans. Okay, transfer is very crucial for SPX. Russell is very important for NDX. Here's a better one to look at. This is the D trender. A lot of money managers look at it. Time is 8:56. I'll speed up. This tells me where we are, 50 and 200 bar from how far last prices from 50 and 200 moving averages. Here's the 50s. Here's the 200s. Okay, and I do a count. There's negative. Okay. So we are only 1 out of 7 negative. This was barely as of yesterday, so we'll see. I think today looks to me on overnight. Yeah, we're slightly down, but remember, we've had a tremendous run. This is an incredible run we've done. So we need to take a little bit of pause there. SV1 Momo. Now look at the system itself. We don't trade this, but we use it as an input, as a preponderance of evidence concept. Long is always, I mean, the weekly has been long for a long time. Actually, when it went short, because it was so fast, it got whips out, okay? But the more interesting part is the daily. Daily went to a short on 26th, day after Thanksgiving, after Turkey Day, yeah. And that was a little bit of a tough day for me. Last Friday was a bigger tough day. But yeah, I made about half of it back already. So you gradually come back up, but wasn't expecting it. But anyhow, we were hitting 4 sigma. Indices don't hit 4 sigmas. I'm sorry, that's a 3 sigma. That's a 3 sigma. That's not a 4. I'm sorry, 3 sigma. Even 3 sigma is not that often, but it had 2 days back to back. The flush is there. The flush is there. They came the next day, was long. Then they look at separation. Can I read the tea leaves? Separation, that is where the 3 sigma is, and the low or print of that bar. It's against the index, not the futures. Futures is noisy. It's going to give you spin your head. You want to really look at what something that cannot be traded and it's very large. Remember, you can trade ES and NQ. Okay, you for $4,000, you can trade one contract. $0 will allow you to trade SPX. You have to trade a lot of I'd say 15 to 20 of the names of SPX of the 500, but those are expensive and needs a muscle. So this takes a lot to move it. That's what I want to look at for signaling. Okay. All right. This was very alarming, but also said if it discontinues, this is a new lows, 52 weeks new lows. If it's discontinued, the low is in the front of us. Okay, or we may have been seeing the low right here. So somewhere in here is the low. If you get discontinuous, it dropped. Same thing here. Now the top is more predictive. When we get the highs, it says we're going to be dropping, and sure enough, we did. Okay, we did. So a little bit of a very small amount of bearish divergence, lower reading slightly. Then again, now we're splitting the hairs, and we went higher, and that was also a setup for a pullback that would be there. Okay, can we go into options and play that a little bit? We can, but there's going to be some damage. Can we do it on market timing? On cash, you can. On the option side, it's still the same. Okay, so that's the reason. All right, what did Momo and SP1 do? SP1 went from -3 sigma. Okay, look at -1, -3, -1.75, and now plus half. Big, nice comeback. And key here story was these two. I think we talked about it in the chat. I'm going to also show, because we show some of these intraday to catch up. Both Momo came back from a negative, I think there's 11 or 12 down there. What is it? 1069, 10.7. Yeah, we've seen this go -13, but recently not below 10. So that was a low. I bought it. This is it. Let's go up. Now let's see if we can pass 8 or 9, because 10 usually is where the warning sign is. VIX, and the VIX complex as a rule. Excuse me. Excuse me. This is live. This bar is live. Only this one. The others are not. Those are locked. This one trades overnight, or at least early in the morning. It starts trading. Okay, 4 sigma, 3 sigma, almost 3 sigma. 3 rules. I learned that from a Chicago buddy of mine. 3 flushes like that. That's how the moves are done. It takes 3 to shove the other side through the window. Boom. No parachute. You're done. Yeah. And that's what happened right there. So we're coming back down. Cost is here on the CI. Are we expensive? Yes. Where do we want to see? We want to see this low challenge, this low down here. 14.5. Let's say 15. We gotta get to 15 on the VIX, and then hardy. Yeah. Good days are here again. Exactly. Still don't like this. This is based on US, so it should be based on lead contract of a CL, but there's a huge blood feud between SIBO and CME, the neighbors across Van Buren in Chicago. Okay. My baby, VXN, I wrote this before SIBO had it, and I know Dr. Rayleigh called me to get these numbers to match again his. This is a pure VIX, the old VIX. That's called OVX, that was done on SP 100. This is SP 500. This is the NASDAQ 100. That's pure VIX. You cannot trade this. You cannot manipulate it like you can here. I don't trust new VIX. I like the old setup. This is a cone. I'm saying it's a cube around the last price. One contract above, one contract below. One put, one call. So it's 8-way. Okay. And to me, that's where I look at volatility. And because I'm trading NQ, I refer to this page myself several times a day. But that's the one I would watch. And you could see also how it steady went up, hit almost 4 sigma and pulled back. Okay. SQ. Okay. Well, the big boys are somewhat quiet. Did they achieve their drop? I don't know. it seems to me the signals we got are too far back. Okay, so one could say this signal probably resulted in this, and we have not been able to get out to this all-time high, 170. Design is 100 to 150. We're at the design limit, which is, but the high is 20 points above it. So are they going to rethink this? I hope not, because then they mess up the comparisons. But this is again the tail risk of out of the money, deep out of the money, uh, put options for SPX, the big contract, not a SPY. So that says, I think they're meandering here. The big boys saying, okay, maybe this is out of the way. Maybe that's what it is now. But we'll have more of these. I mean, this is a very key indicator. We'll have more of these. I mean, the reason I became timer of the decade for the last 10 years was the two signals from this machine. Now, of course, I had good money management before and after and some lucky trades, all that. But the two signals that said, Farry, nobody's expecting this. Go do it. Go get, for example, February 12th last year. Go short this thing. And everybody said, it's going to go away like a miracle. Or, oh, we have Lysol for you. All of that, gone. You saw how he dropped. You saw how he dropped. Here, let's go here. Right here, actually. Right here. This one. Look, you saw how he dropped. That's February 12th. And then, of course, down there, I had the audacity to say I'm going to get long. Remember the webinar here? People were asking me about it here. They were asking, what's the date? I said, well, I don't know. I don't know. Who knows? You want me to be correct both on price and date? And I said, well, why don't you just for a test? I mean, that was a pure luck. I did not even think about it too much. I said, well, historically, we have seen bias change around spring and beginning of spring and beginning of fall. March 21st, September 21st. That's well documented in my writings and other people's work and so forth, and people who are like Arch Crawford and so forth who look at planets. It's just gravitational force. It makes people go crazy. Well, on the 23rd of March, which was a Monday last year, the Honorable Jerome Powell decided he's going to flood the market. We had said back here, look for 21st. 21st was a Saturday. Friday was the 20th. Sunday night, it printed 18 on the Dow. It printed Dow futures 18086. My target was what? 18,000. Trump was elected back in 16. I said the hedge funds will slap him. They're gonna take him down there, flush him, and then bring it back. And then I expected another move down to 14.8, 50% drawdown. Okay, so one was 21.8, which was December 18 low. This one, there you go. December 18 low. This test. Okay, and then the second one was his election. Third would be 50% from the peak. Three different rules, three different criteria, non-correlated. Well, we didn't get that far. Well, we changed our bias. We changed our bias a couple of times inside too. For 1 day or 2 days, we could not put any trade on because we were moving 3,000 points in 1 day. The people who were trading cash with me, they didn't make they made it like a bandit. Those who tried to put their own options on against my advice. Okay, I can't hold you. I can only give you advice. I cannot put a gun to your head. Against my advice, some got disseminated. Like, Farry, what happened? I said, you see what a vol is? Do you understand vol? I used to teach vol at SIBO. These vols means that at any time when you're up there, what was it? We were at 80, I believe, or close to that. Let's do it like this. Okay, let's go back here. When this is a lesson I want to go over because the question will come up: why we didn't put this up? Why we put that up? Monday morning quarterbacks are not allowed here. Okay, go fly a kite if you're a Monday morning quarterback. That's easy. Tell me in advance what you think. I'll have more respect. And for that applies to myself. I want to have more respect for myself. I can't just come in and say I would have done this. Here we go. Look where we are. When you have vols like that, there you go. Is that the 80? Yeah, it's an 80 vol. When you have the 80 vol, the chance of you being right is very minimal. Either way, boy, the move. The back and forth is so huge. At any given time, let's say I sell the order out and say, get out. What if people didn't get the email? Coming back an hour later, they're decimated. That's how the moves are so huge. So when it gets that violent, I usually don't trade the options. I give the direction on the cash. Now, that's not cheap because you're trading a SPY. It takes a lot of money. But hey, I don't make the markets. I just follow them. Okay? And my job is to give you warning. Telling you not to trade is advice itself. Remember that. Okay. So now, what if I tell you not to trade and the market runs away? Then that's my mistake. I'll pay for that. But that's the risk I take. So, yes, remember it's a priori issue, making a decision before the facts are clear, in a partial set of information. That's all we do. We know what happened yesterday and today. We have no idea what's going to happen. I'm sorry, yesterday and day before, or this week. We don't know what's going to happen next, starting in the 21 minutes. So, all right, let's come here. Another discussion we had in the chat room. You see the divergence? Okay, we were coming down. Well, look at the reading. This is tea leaves. I understand that. But I wrote this baby back in, I don't know, 97, 98. And it has not failed me. It said, I'm not going to get into detail about how it does it. It's never been distributed. It will never be distributed. I'm hoping that my niece will take over the company one day. And then she'll have the code. She's a data scientist, master's degree, and math whiz. But she's not money oriented. That's the problem with her. If she's money oriented, then she would know what this is. But that's the low. Look at the divergence. Okay. Now we are having an issue here. We always talk about rendezvous points where these three meet. The bottom's a little bit different because it doesn't stay a lot of time down there. It's nervous down there, right? Fear, greed. The greed is simpler. You can see it. It catches up. Here's a little bit faster. So this is we have to interpret. We didn't exactly get there. This is a longer term, the white one. All it is the stock RSI. We do it three different periods. But when they line up, this is a key area to watch. Okay, so we may not have a perfect one, but no one indicator is going to tell you what to do. If you wrote one indicator, happened to me after my first one. I thought I had it. Holy Grail. You're a king. Yeah, right. Tell me about it. Yeah, that's why I have an ex-wife. Yeah, lost too much money. But love your losers. That's how you're going to learn anyway. Just make sure they're small and take the message. So let's go to spread. The VIX spread 0.37. As you know, last week we did that at the wrong month on. I forgot to update it. Next week, I don't know what the expiration is, but next week I can look it up on the background. What is going on? Hold on, let me open up the option station. The issue is that when does the VIX expire? Okay. Let me see. Okay. Okay. That's loading the background. All right. So we'll get to that. But it's 3.78. It's kind of lofty a little bit. That's what it's saying. Look at the lows that we put in. Okay. And look at that diversion. Now that's a 30-minute intraday, including overnight. But I want to go here to VIX. Where's my VIX? Hold on. Hold on. Let me see. Inquiring minds want to know. Hold on. Okay. Now, so this is going to expire in 12 days. So December 22nd, which is after the expiration. So because of the different number of weeks in different months, every once in a while it gets behind. So it's going to expire on 22nd. Last trade is 21. Okay, so we're going to still now we'll switch on the 17th. On the 17th, because they always switches. If it was an expiration of 15, we would switch on the 10th. The Friday before the shift will occur, and we have to shift this over. This is highly liquid, the spread, and very, very big firms trade it, and you've got to pay attention to that. Which one was funny? Anyhow, so 377, right? So to me, it's a little bit lofty. Okay, that means we're doing we're positive, we're holding. Probably, maybe we go higher. I don't know. But tomorrow is CPI, non expiration. It's gonna be a tough couple of days. The easy money is made, guys. The easy money is made. Be careful. Yeah. Yields. Okay, here we go. 1.34. The 10-year. Remember, long-term institutional money for, like, let's say, skyscrapers in Manhattan, because they have a long-term obligation. That's how they acquire those assets and hold them. Housing, cars, and what's the? I don't know what the 2-year is. I don't post it. I wish they had 2-year. And this is the short-term commercial paper. But you could see very flat, but there was a big push down. Huge drop there, 1.7 on the 30-year. So They're pulling back up. That's not a good sign. You need to have some yield up there around 2% ish. Now, if you look at the CPI, PPI, inflation adjusted, we have inflation. We have a 3-4% inflation. We have not been used to that. I was a student of Richard Roll. I suggest you read some of his work. He's the payoff curve for Goldman Sachs. Probably the premier person who understands interest rates. Now, I think he's retired, but there's a write up on him about here. At Thorpe, yes, Richard Roll, this guy. Okay, this is page 9. Okay, he's retired. Anderson School of Management, number 2 school in derivatives after U of Chicago. Anyhow, he one of his students. He told me back in '95. He says by turn of the century we'll enter an interest rate regime that we have never seen before. I said, in what sense? He goes, very low, and we're going to keep it low. I said, why? He says, deficits. If the interest rates go up, the interest expense will explode the budget. The country has failed. So they'll do anything possible to raise down. Well, that was before 9/11. Look where we are now. Yeah, there's a debt. And then that was 9/11. Then we had the Trumpkins. Look where we are now on the debt. So we've exploded. So these rates are going to be kept very, very low, which is the covenant with the net savers is broken. Again, that's a problem down here. The bonds are not giving him anything. They're coming to risky stuff. I have no idea. What is a 70-year-old doing with a Robinhood account and is trading GME? Give me a break. Give me a break, please. Anyhow, that said, let's go to the last one. That's very dangerous. We always had an interest in stocks and bonds. The bonds portion is gone. If you have to hold them from a past, it's okay. But how are you going to replace it? They come to maturity. How are you going to replace them? Cash on cash. It's like, what do you call it? Eli Broad, my sister's boss, asked me once of Kaufman Broad, yeah, one of the richest folks in California, said to me, I don't know what to do with the assets your sister buys for us. I said, why? He goes, I can't sell them. She's buying it better than I am. And I'm Jewish and he's not. She's not. I said, how do you know she's not? And he laughed his head off. Is she? I said, I don't know, but she acts like it. She's so tight with money. And she was buying it so cheap, the cash on cash, they couldn't replace it. They couldn't buy it again. Of course, she did it at the right time too. It was, what do you call it? Resolution Trust. It was down there. She had $2 billion cash from Eli, and she went like a shark. When you tie that low, like some of the people we had, when interest rates were like 6-7%, and then they're coming to maturity, where are you going to put them? I have some friends here that are older than me. They're in that conundrum now. Your income just gets devastated. So can you move and play XRP or Bitcoin? I don't know. I'm scared. I'm scared. Okay. All right. Last but not least of the charts, dollar sign SPX Alpha 200R. This is, you can get it from stocks charts. S&P 500 percentage of stocks above the 200-day. We talked about what here? Divergence, 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 divergence. It kept on going, divergence. And then, bada bing, it hit it. Okay? Again, I have some Italian friends down here. Yeah, it's Naples. One of them is a very good singer. He does Frank Sinatra stuff. His name is Bada Bing. So, anyhow, bada bing, we did it. He went to 55. Remember, 50%. This 55 to 45 area, if you have heard my other discussions in the past, is a sacred ground. Look where it went. It touched, it came back up, has recovered somehow. But this also says that some people were hiding in a few names, which is when the big money gets scared about the growth movement, they hide in the big names. Why? Better balance sheet, better products, better management, you know. But at one point, they get broken too. So we're flushed. Now the issue becomes, what's our guidance? This difference between these two lines, the two MAs. Remember, I'm using 20 and 50. The preset here is 10 and 20. That's too fast. You got to do a lot of whipsaws. Don't do that to yourself or your portfolio. Do to 20, 50 to see what that direction is breaking. Right now, it's actually breaking down. Okay, to the negative, even though the number is going back up. But that's mean reversal. Keep an eye on that. Okay. Now, overnight, here's what we're doing overnight, and then that's our last shot. I gotta let you guys go. It's 9:18. Up, down 13, 53 on NQ. Down 16. Of course, oil is down almost 1%. Okay. This is a lead contract, of course, against all futures. All right. Again, tonight we'll roll over to H22s for these. Not today. We're still going to trade Z21. Why? Again, the proof is right here. Volumes, volume, volume, volume. There you go. It's getting closer, but it's nowhere close to cross yet. Same thing we do it with, what do you call it? Our crude contract. We wait for the rollover to see the volume jump. That will be next week. Actually, end of next week, it'll roll over. It's around 17, 18. So ESN and Qs, again, you see that? Yeah, 7-1. This is like 3-1. So we're not there yet. Tomorrow will be. With that said, any questions for me? Thank you for attending. This webinar is being recorded, will be posted on our YouTube channel, and it's the best way we disseminate it fast to everybody, and so forth. Okay. Yes, I would expect to put one on today. Yeah. Yes, Tom. Yeah. I expect one to put on today. Yeah. It all depends what kind of day we have. Thank you, sir. Appreciate it, Dennis. Most honored that you're here. Tom, uh, I would expect to put one on today or tomorrow. Yeah, most likely today. Why? Because of the rollover, we would be lower on volatility. It's easier to pick one. Yeah. Remember, when we get into picking these trades, if the vol is too high, it becomes more of an art. Okay, you got to kind of time yourself. And when the vols are dropping like this, I tell myself, Farry, let it drop because we're paying too much going in. This is what this is telling me. I'm paying too much up there, and so I couldn't get short here because the reversal came. I'm paying already too much. That means I could decimate it twice, right? Now, I could be wrong, but I got Mark Esposito, 27 years DPM. He was a founding member of Wolverine. They use his DPM to start Wolverine. Okay. If I have a question, I go, hey, Mark, what do you think? Okay. As a good Italian, he knows how to trade. You know, the last job he had, this is his second job ever. The last job prior was a handicapper at Arlington Heights. Yeah. So he understands odds. He would come back and tell me, hey, you should do this, you should do that. Yeah. Actually, he's the one who helped me develop Pro by certain guidelines. We have not met those guidelines to put a trade on. Yeah. But I think we're getting there. I think this afternoon we could, and with the expiration, the rollover, my intent would be. Well, let me show this too. My intent would be to construct one. Yeah, for a 2 weeks, 3 weeks duration, and it would be bullish. Yeah, my target is about 5,000. Numbers are going to be very strong. You're going to see. Okay. Yeah. Now, oh, by the way, we've added 2 more charts to our repertoire. We have not put it as our display. We just talk about it here because they're public data. They're the public code. It's not mine. Not mine at all. I've had help from others to interpret it. There's so much you can know. You know, you got to get others coming in and help you. I'm indebted to Peter Cook and Bo Natwick, who, this is from Bo. I wrote the code, but he taught me how to, because he doesn't do trade sessions, but he taught me how to interpret it, especially if we're doing it 30 minutes or 60 minutes, especially in the chat room. We look at this quite a bit throughout the day, just as a snapshot of where we are. And if you have a days like this, the days like this, where you start pretty good, you go up and then it gives back. These things you need to know. The other one is the buying power. Now look what this thing has done. It was short on NASDAQ, still is holding the short. Now this work is by Peter Cook. This is major work, guys. This is major. And without these indices down here, it would be impossible. But Peter has a tenacity I've never seen. And so I'm indebted to him. A very humble guy, works hard, and he's a ferocious reader. Look at, we have a buy there. This is mid caps. These are all futures, live, 24/7 is running. Of course, it's daily, but you know the bar is being built. And we just went to a buy on Russell. These 2 are very useful, both in terms of the up and down volume, because that's a confirmation. If you read Bollinger's on Bollinger Bands on volume, but actually John Bollinger on volume indicators. These are confirming indicators. Okay, he was one of my mentors. So that's it. course, we're going to go back here, look at our catch, and see what names are coming up. You can see that. That's our scanner. That's part of our happy expert. That tells us what to look for, and then that ties into a chart here. So when I say, for example, I don't know, pick one. Pick anything you want. Let's take DVN. Yeah, energy. Okay. It goes to this. This is the chart we send you. Automatically goes to DVN. If I change it, it changes automatically. If I hit Qs, boom, there's your Qs. Boom. So I can see where am I in fear and greed. This is the code that was used to develop the scanner. Actually, Happy Expert for the plotting, the scanner for the options, and now the futures, which is the OIP. Okay. So we've gone through tremendous amount. I'm looking forward to taking a couple of days off. I don't know when. So is my program. I mean, it's just been tremendous. And of course, part of the problem is me. It's not him. He's actually a pretty hard worker, and he understands TradeStation. He's a veteran of TradeStation wars. But I throw him interesting problems, and he just like one day he didn't sleep. He sat to the wife brought him breakfast, and he was still working. Yeah, yeah. So I get a message from the wife like, "You're gonna drive him like crazy like this." You know, he needs a little bit of time off. I said, "Well, tell him. I tell him. I don't give him deadlines. He gets so excited about what the concept is, and he's seen the results. He's just it was extra time. But we're working on a couple of bots. They're not going to be distributed, but it's used for yield enhancement during the days that, like, let's say here. But I do share the results in the chat. If you hear my voice, you'll see what I'm running there. That's okay. Let me go here. Let's make it 60. Okay, now I'm sorry. Yeah, then go here. Okay, when you get these, yeah, it kills it. It kills it. When you have or possible this side because it's a direction neutral. Okay, so it kills it. It's a bot that looks at internal bid-ask moves. It's just amazing, just amazing. I'm getting more and more impressed by what TradeStation has done. Forget any other platform. It's not one thing. Look what they have built as a totality. Backtesting, data built in, right? You don't have to get it from third party. Execution, and formula generation. You can write your formulas. You can test it. You can trade it live, and you have simulators, and you have tremendous data. I think they're going public too to a SPAC. Forget other platforms. These guys are clear winners. With that said, I gotta get out of here. It's 9:26. You guys need to go trade and make some money. See you later. See you in the other chat rooms. Bye bye.